This is Green Street, NYC. Joshua Greenberg and Daniel Greenberg joining us to present the Metropolitan Avenue Assemblage located in the Williamsburg neighborhood of Brooklyn, New York, in an opportunity zone. Daniel, Josh, good to see both of you. How are you doing?
Hi, Jimmy. Thanks for having us on. It's always a pleasure to be here.
Great,
Um,
great to have you guys back. You guys presented this at our OZ Pitch Day back in the fall, and you got some updates for us. So happy to take it all in again.
Absolutely, Jimmy. So over to Dan, who will go through the deal highlights. We had a great time here in November. It was very successful. And we're here to reintroduce the deal to hopefully some new investors, even though we are now fully raised, but we'll get into the rationale for being here a bit later. First and foremost, we want to explain to the audience what we have in terms of deal, and tell everyone a little bit about the deal, and then we can go into a bit more detail of the raise and everything after that. So Dan, over to you. So yeah, over to you.
Thanks, Josh. So again, Daniel Greenberg, Joshua Greenberg, we're brothers and we're principals at Green Street. We are multifamily, ground-up multifamily developers in Brooklyn, and we've done 6 deals in Brooklyn, 4 in the OZ, and we're here today to tell you about the Metropolitan Assemblage and specifically why it's the best deal that we've ever been able to bring to our investor base. And there are two big reasons for that we'll get into. The first, as Jimmy mentioned, is that it's located in the neighborhood of Williamsburg in Brooklyn. Now, for anyone who is not familiar with New York or with Brooklyn, Williamsburg is basically the hottest, most in-demand neighborhood in Brooklyn. We have some buildings there where rents are around $100 a foot, so that's something like $5,000 a month for a one-bedroom apartment. So it's really not a neighborhood that you'd expect to be an opportunity zone. Usually, OZ neighborhoods are lower income. There's specific risks attached to that. This is a neighborhood that is extremely desirable. Developers are building there, whether it's OZ or not, and yet there does happen to be this small OZ tract in Williamsburg, and this is actually our second deal in that location. And the reason why there's this discrepancy, why there's this very high income, in demand neighborhood that's also an OZ is that, as a lot of people probably know, the OZ maps, at least for OZ1, was based on 2010 census data. Now we're in 2026, 16 years later. Williamsburg has gone through an absolute transformation since it was rezoned. It's gone from a very industrial, sort of working class neighborhood to a very hip, gentrified, in-demand neighborhood that it is today. And so all of this is to say that investors can have the opportunity here to invest in a high demand, very attractive neighborhood with all of the upside that comes with that, but also get the OZ benefits. So that's the first reason why this is the most attractive OZ deal that we've ever been able to bring to our investor base. The second reason is that since we bought the land in 2024 for $22 million, New York and our location in Brooklyn specifically has gone through 2 upzonings. So we bought the land for $22 million. The New York legislature passed a renewal of a program that was called 421A. It's now called 485X. The point of that is that we got a 33% bump in buildable floor area, which is directly proportionate to the value of the land. And then after that, there was actually a second upzoning called City of Yes, where we got a further 10% increase in the number of buildable square feet. Again, that's directly proportional to the value of the land. So we bought the land for $22 million. After the first upzoning, we got an appraisal, and the appraiser came in at $32 million. And then there was about a 10% upzoning after that, which puts the value at around 35 million. So we bought it for 22 million. It's worth 35 million straight off the bat. Haven't even started construction, haven't done anything. Honestly, it was really just being in the right time at the right place and taking a view on what the New York legislature was going to do. And so it's really a great head start for our project, and it really helps the overall performance of the project. And that's why we're looking at 60 to 70% profit margin on cost, which is substantially higher than we've been able to offer in the past.
Absolutely. And the good news is that the investors still are able to get into the deal and invest at the original land price of 22 million. So we are absolutely sharing that upside with our investor base.
Right, yeah, and effectively, if someone puts, say, $100,000 into the deal on day one, because of that upzoning, the $100,000 is worth $120,000.
Yes, okay, and so we came here in November and joined the pitch day. At that time, we had raised about $22 million. The land also cost 22. We had also raised 22 out of $33 million of equity that we wanted to raise. We came on, we had a great reception from the investor base, and we managed to raise our full equity allocation, which was $33 million from about 40 investors. What we've decided since then is we'd like to expand the amount of investors we have in our business, and what we have negotiated with one of our big investors. We have a big investor who has invested $12 million into Metropolitan, and he's agreed to reduce down to as low as $8 million in order for us to have the opportunity to reach back out to the market and see if we can expand our investor base. And that's really why we're here today, is that we'd love to welcome some more investors into our business. Jimmy, we've got a video that we've prepared on the Metropolitan deal. We'd love to play it now. The Metropolitan Assemblage is hands down the very best deal we have ever brought to our investor base.
The land price was negotiated and secured just a few weeks before the announcement of the new 485X New York housing program. The new program, which is fully elective, offers developers a 35-year real estate tax abatement and a 33% increase in buildable floor area.
These benefits are in exchange for allocating 20% of the apartments to slightly below average income tenants at below market rents. It's a highly attractive offer.
This resulted in a land basis of only $226 a square foot, in a market where land typically trades at around $350 a square foot.
The deal is also located in an opportunity zone in Williamsburg in Brooklyn. Williamsburg is both one of the most desirable areas in New York City and one of the most desirable opportunity zones in the country.
It's exceptionally rare to find a development opportunity which is both in an opportunity zone and which is in an area where condos are trading at over $1,600 a square foot, and where a new two-bedroom apartment, for example, would typically rent for $6,000 a month.
The development plan includes 3 buildings with a total of 132 apartments. The total cost is projected at $82 million. The value at completion is projected at $135 million. And this implies an impressive margin on cost of 65% and a development profit of $53 million. There is also the 2-phased aspect to the deal. After completing phase 1, we will be able to refinance the completed building, withdraw all of the equity that we invested in phase 1, and redeploy it back into phase 2, really maximizing the use of the invested capital.
This means that in year 5, when phases 1 and 2 are complete, we plan to return the full amount of investor capital back to our investors without diluting anyone's ownership in the deal. The deal also has a 10% preferred return, and only after that do the sponsors share in any of the surplus profits. The projected net IRR to investors is 19%. Since it is OZ, these returns are effectively tax-free, meaning that the pre-tax equivalent IRR is 22%. This means that a $1 million investment is projected to produce about $4.4 million in proceeds over the 15-year period. The pre-tax equivalent equity multiple is 5.4.
This would be an extraordinary investment outcome for even the most demanding of real estate investors. Okay, so
Thanks, Jimmy.
thanks, Jimmy. So just a little bit more background on who we are and our business. So Green Street, New York, has been active for 9 years. This is our sixth ground up multifamily development in Brooklyn. We have a very focused strategy that we don't deviate from. We have a set tenant demographic that we go after, and we typically develop in better areas in Brooklyn. Of the 6 deals, 4 of them have been in Opportunity Zone funds. So this is our 4th Opportunity Zone fund. The fund is the compliance is done, and the findings are done by Citrin Cooperman, which is a top 20 accounting firm in America, and gives great comfort that they are there looking after the compliance and making sure everything's in order. And the business is and that's on the deal. The business is 4 partners. It's myself and my brother Daniel. We really run the business. We have our father is a non-operating chairman of the company. He helps with financial backing and had a very successful career in real estate in South Africa, 40-year career. And the highlight of his career is he was the managing director of the largest real estate company in South Africa. I was educated in, I've got an economics degree from university in South Africa. I built a few hundred units in South Africa before coming over here and starting Green Street 9 years ago. Daniel has got a master's in economics from Columbia and a Wharton MBA, and about 15 years experience as a real estate developer. And then our 4th partner is a gentleman by the name of Warren Silverman. He's got a master's in construction management from NYU, and he's built 26 ground up buildings in Brooklyn. So he's got a wealth of construction related knowledge. He's really our director of construction, and that's really the team. Dan, over to you. Let's go through a few of the highlights in the presentation for the little bit of time we have left. Okay, Dan.
Okay, I just want to be cognizant of time. We have about 4 minutes left, so I'm going to breeze quickly through the presentation. The presentation will be available after this. Everyone should feel free to reach out to either Joshua or myself. The contact details will be made available by Jimmy.
Right. So the presentation will be available from Jimmy's website. It'll also be downloaded. You can also download it and rewatch the video if you'd like on our own website. And we're happy to set up Zoom calls and do tours of our portfolio in Brooklyn with anyone that's interested in possibly investing. So Dan, over to you.
Right. And then our website is greenstreet.nyc. So pretty simple. Again, this is the Metropolitan Assemblage. There's an executive summary which people can read by themselves. What I wanted to focus on here is the projected cash flow. So this is around a 15-year deal, 10-year minimum hold for OZ. We've projected around 15 years. The important parts that I want to focus on are the cash flows, specifically in year 3 and year 5. So as Josh mentioned earlier, this is a 2-phase development. We're going to build phase 1, refinance, use part of the cash out from phase 1 to return equity to the investors, and another portion to build phase 2. And then once phase 2 is done, we'll refinance phase 2 and return whatever cash out there is to investors. And so our projection is that we'll be able, for every $1 million investment, just as a round number, we'll be able to return 460,000, so around 46% to the investors after phase one. That's after about 3 years. And then after 5 years, we'll be able to return another 700,000. And so after 5 years, we'll actually have returned not only the full investment, but we'll have returned about 1.3 times whatever our investors invested at the beginning. We have some stats down here: 16.6% IRR. There's a pre-tax equivalent, which is above 20, which is really, where you want to be for an OZ ground-up multifamily development. Equity multiple of 4.1, and pre-tax equivalent of that is 5.65.
And what that basically means is that if one was to invest $1 million over the lifetime of the investment, you'd get back about $4 million in proceeds, $4.1 million in proceeds. Just on that. Okay, Dan, go ahead.
Yeah, we only have a minute, so I'll just sort of run through a few things. This is a rendering of phase one. We are planning to break ground this summer. There are a lot of renderings of what the product's going to look like. We have information on our past projects. All of the budget and operating expense rental information is here. We're happy to go through it with investors, whoever's interested. And there are bios of all of us at the back. So again, whoever's interested, please reach out to us by email. We're happy to do Zoom calls, meet in person, and yeah, we're excited to share this opportunity with anyone else who's interested.
Perfect. Well, Josh and Dan, really appreciate it. We do have a few more minutes, built in a little bit of buffer time to the schedule, so we got about 4 more minutes until our next presenter is due to come up. So we'll use that to address some questions. I wanted to check out this one from Muru in the chat, first of all, who starts by saying, Josh and Dan, great to see you guys again. As I invested with you both, just want to say you both are amazing to work with. Great compliment there. Thanks for joining the show today, Muru. Question: is the terms with public raise better than what the big $12 million investor had, and good for all investors? That's question one. And then second part of that question is, does this $4 million gap risk the project timeline?
Those are both great questions. So our minimum investment is $250,000, and whether you invest $250,000 or $4 million or even $12 million, the terms are identical for all of our investors, irrespective of the amount that's invested. And us coming back now, being fully raised, and trying to expand our investor base does not in any way impact the timeline. We have a full raise, and we're starting the project either way in the summer. If we are able to get more investors involved, great. If we're not able to get a dollar more, we're still going ahead as planned, and we still have a successful full raise.
Excellent. Well, I think you just answered one of Arnold's question. He asked, when will you begin construction? You say sometime this summer.
This summer, yes.
Yeah. Arnold had a second question, which is, do you have a construction loan commitment, and who is the lender?
So that's also a great question. It's a bit early in the process to have a firm commitment. What we do have is a great track record, that being our 6th development. For the last 5 developments we've done, we exclusively use bank debt. We don't go to we've never gone to a hard money lender, and that's not part of our business strategy. We are going to be applying to banks for the loan. Our applications are always well received. We've got a great track record of profitable developments in Brooklyn, and we have at least 2 times the value of the debt in net asset value on our balance sheets. So, and we personally, as sponsors, are putting in $3 million into this project. So, our focus and our alignment is there. And we will get a bank to finance us. And the question is, which bank's going to offer us the best terms?
All right, we got a few more questions that have been coming in. I'm not sure we're going to have time to get to all of them. So if we don't answer all your questions, please do reach out to Josh and Dan. They've got their email address on the screen. I think we may have put it in the chat earlier as well. If not, maybe Angela can get that in the chat now. I'll get to some of these questions from Brad that deal with some of the deal terms. What's your preferred return to investors, and what's the promote between the sponsor and investors?
That's actually also a great question. Thanks, Brad, for that question. So we have a 10% preferred return on our investor capital, and we have a fairly unique structure in OZ. So we actually charge 0 fees in our business. There's no acquisition fees, there's no development fees, there's no refinancing fees, there's just no fees that we earn. We have a provision in the budget for a 5-year salary for Warren, who's effectively the owner's rep and project manages the development. But in terms of myself, my brother, and my father, we earn over the full 15-year duration $0 in fees. And what we do is we have a 10% preferred return that we give to our investors, and after that we split any upside after that 50-50. So, really our interests are fully aligned. The more money the project makes, the more money the investor makes, and the more money we make. And, if the project does poorly, we set to make nothing. So we only do one project at a time. This is our full focus for 5 years. And, we are fully focused on making this as profitable as possible, because that is the only avenue which gives us financial remuneration is making a big profit on the development. And we're off to a great start, being about $13 million up on the land already.
Very well aligned with investors. Couple more questions, and then real quick though, because we gotta cut you loose and get to the next presenter. These ones also came in from Brad. What's the status of approvals, and is the land under contract?
Oh yes, we own the land outright. The land is, we've closed on the land. We finished our plans in December and submitted them to the Department of Buildings for approval. That's about a 7 or 8 month process. So we are simply waiting for our approvals, but our plans are done. Renderings are in the pack, and we are now just waiting for approvals and ready to go. And yeah, that's basically it.
Yeah, I'd say we'll have approvals and be able to break ground in 4 months.
Jimmy, and then one other thing I just wanted to mention is not to do with the question, but just to do with our investor base. We have 40 investors in the project. Every investor that invested in projects 1 through 5 has also invested in project 6. So, this is really a very important project for us.
Very good. Well, Josh, Dan, Green Street, looking good. Thanks again for your support of OZ Pitch Day. I'll cut you loose there, but appreciate your presentation today. Thank you so much.
Thanks, Jimmy.
Jimmy, thanks. Always a pleasure to be on your show.